Hello, everyone, and welcome to the Week in Review. Say it every week, and it's always true. What a week it's been. But this week, it is particularly true. We had a lot of interesting developments, some legal developments, some regulatory developments. But of course, we're also on the verge of one of the most significant events, certainly of this year and maybe in the history of the space, and that is what you all are anticipating next week's. Well, some of you are anticipating next week's move to proof of stake for the Ethereum blockchain. So why don't we go ahead and kick it off with some talk about the merge, since I know it's on everybody's mind. Christian, I understand from your reporting that, I also knew from my own reading that the first of two major upgrades called Bellatrix has gone into effect relatively successfully with some minor hiccups I saw on Twitter. So, could you just kind of give us a breakdown of what's the state of play and is it really happening this time?
Yeah, so this was basically the first of two parts. So the first is called Bellatrix. It's basically like preparing the consensus layer, and the second part, Paris, is what will happen next week, and that's basically going to mark the transition from proof of work to proof of stake when it hits a total terminal difficulty number. It's like this metric of like when it gets too difficult to like mine the coins. So at that point, it moves to proof of stake, as far as I understand it. Basically the final update is complete now for the main event. Is estimated to land around late Tuesday, my time, late Tuesday night / early Wednesday. So probably about September 14th, as like the estimates that were predicted earlier this month. Does seem to be basically on course. Yeah, there were some like minor issues with like some validators being in sync, I think it was, but like this is the clearest sign yet that this is happening next week. Everyone is sort of gearing up for this. There's been various commentary on it from industry figures. One I was looking at was Arthur Hayes, who said a couple of things on it this week in a couple of podcasts. He's kind of talking about the impact of ETH issuance and the sort of cut it's going to bring, because it's basically going to go down from 13,000 ETH being emitted a day to around 1,600. So that's like quite a drastic cut. He argues that this is going to be a bullish catalyst that plays out similar to a Bitcoin halving, which is what a lot of ETH holders are I guess, hoping for. That's why they sort of dubbed it the triple halving event. There's obviously the energy consumption thing, which is, I guess, a broader narrative, and that's like a long-term thing. It's pretty important because it's like changing, I guess, potentially the public perception around it. It's funny, I was at like this festival last weekend, and I was like talking to someone. I was wearing a Coin Center jumper, and they were like, "Oh, I really, it's like late night or whatever." And they were like, "Oh, I really like your jumper. What is it?" And I was like, "Oh yeah, it's this like it's this like crypto lobbying group." And she just like kind of at that point was just did like a puking face, as if like, oh, like that's like, crypto kind of thing. As if it's like really bad, and that is just like a notable real world example of how I guess following especially these like periods of mania like we saw last year, there's still like this big like I guess misconception, and a lot of people have certain feelings about crypto and certain aversions to it, and one of those is as a result of the whole environmental thing. So ETH moving to proof of stake is, obviously going to be significant for that. I mean, so many people hated NFTs because of this environmental thing, and now this is happening. Those arguments don't carry as much weight, and then it raises a question of, I guess, Bitcoin as well, and like Bitcoin is probably not going to move from proof of work anytime soon. So if you have the second chain and the most used chain on proof of stake, then it's like, oh, well, why can't Bitcoin change? And maybe it's going to impact that. I think that's probably something. It's not going to happen like next month or next week, but in a year or two, maybe next cycle, maybe that will be like a dominant theme. Again, yeah, hard to say. I understand what Arthur's saying as well, like why he's bullish. He did also point out that it could be a sell the news event. I personally wouldn't be surprised by that because he, rallied very hard to like 2K last month. Still, definitely can hit 2K before next week. But it's just like, I think a lot of the merge hype we had has kind of happened, last month when you had like the ETH power and all this other stuff coming. But we will see next week. I expect it's going to be quite a volatile time. You have these airdrops coming out as well. Probably opportunities for people to make money there. We did actually run a feature this week that everyone should check, especially if they're holding ETH. So this was Tim's. It's currently the most trending piece on our site. So if you're on the homepage, you can get there under trending news, and it's basically a guide to capitalizing on these airdrops. Because if you hold ETH, you will get these just on like a new address. So basically, it's a pretty simple way of doing it. If you have, say, a Binance or FTX account, you can just add the new network on MetaMask. And I mean, maybe you want to hold the coins, but maybe you want to sell them on day one. For me, I'll probably play it as like a very quick sell. We also ran a poll this week, and it seems like a lot of people are intending to do similar. So yeah, there are lots of things going on around this. Like, it is realistically the biggest crypto event of the year and arguably past few years. We've obviously had other news, like one of the biggest blockchains collapsed and caused a meltdown, and then that led to a major liquidity crisis. But these are more, and El Salvador, Doge, all these things. But these are more like news events rather than like a technical update. And we can anticipate it, right? We know it's going to happen. Well, barring any delays, we know this is happening Tuesday or Wednesday. And yeah, I guess the question now is, which way does the market move? And let's hope it goes off without hitch. I haven't made a secret that, I hold ETH, and I'm very hopeful that this will happen next week. I think it would hurt momentum if it didn't, but I'm pretty confident that it will. And what that means for ETH moving forward is dominated over the past few weeks. Maybe not today. Bitcoin seems to have woken up. But we'll see. But I've kind of said before, I think the merge is kind of a long-term play, as well as, although it's kind of risen recently, the impact of it, like potentially this deflationary asset, we'll notice that over years. It's not just going to be a months-long thing. So let's see what happens.
Cool. Thank you, Christian. I think it's worth unpacking this, or starting to unpack this, with what's on everybody's mind, and you alluded to it, and that's the price action around Ethereum and what is largely anticipated to do after the merge, which really there doesn't seem to be a set consensus on. I mean, it's a matter of looking into the future, so they're really how can there be? But there's real debate over whether or not this is going to be a short-term or a long-term bullish catalyst. I think a lot of folks are agreeing in the long term that's probably bullish, considering the reduction in ETH issuance. But regarding like how the markets are responding to the news, I just will briefly. I'm looking at a 3-month chart for Ethereum right now, and these numbers are going to be familiar. But just to recap. June 20th, let's see, I think it was June 20th. June 18th, ETH had a 90-day bottom of $940. By August 13th, we were Nope, August 14th. We were over 2,000. So within the scope of 2 months leading up to the merge, ETH saw 100% price increase. Since then, however, mid-August that is. The tail end of August we had kind of a decline to 1,500, and since then we've had a slow progression back upward to about 1,750 where we're at today. 1,727 at the moment. So I would like to open this up based on the trajectory of how the charts have been kind of following the news. Let's see, I hate to put this in a binary term because it's easy to answer the question, but I guess how many of you share Christian's concerns about the Sell the News event next week? Because I think a lot of people are really interested in what the short-term price action could be. So I'd be curious to get everyone's thoughts on how they see ETH performing in the next month to 3 months after the merge. Tom, I see you unmuted. What do you got?
I think it's really it's one of those super debated subjects that it'll probably end up. I don't know. I kind of think a good framework for the merge is probably just to think in trading terms, it's probably something similar to a CPI print or a Fed meet where you will probably have volatility both ways. But I'm not a trader, so I really don't know. But something that's been on my mind, not long term, but straight after the merge, is imagine let's say the merge happens and it's successful and everything. Once people calm down and stop feeling excited and everything, the next big event that happens on Ethereum is the fact that withdrawals for staked ETH are going to be enabled at the beginning of 2023, and so which could lead to a big. Well, essentially, a lot of people are going to be capable of withdrawing ETH and potentially selling it, especially if they've had liquidity issues, some lending companies and everything like that. So I could actually imagine the next phase of the ETH trade being sort of everyone expecting this bearish catalyst within the next few months. I mean, I don't really know how it's going to play out, but I know it's got as soon as people start thinking okay, what's ahead? It's going to be this this withdrawal enabling. So I think that's something to keep in mind. But otherwise, long term, obviously, if you have 90% of your coins and a 90% reduction in coin issuance, that's obviously really good for the network and for prices.
Cool. Thanks, Tom. Yeah, I think that's all pretty reasonable. I'm curious to hear from some other folks as well. I'd like to get I think it'd be good for us to get kind of a group consensus, or not a consensus, but just kind of a group roundtable of the 7 of us who are gathered here. Just from the perspective of for the people listening, we're a crypto native team. Our thoughts are, they're fairly competent. They're well researched. So, Navesh, how would you like to weigh in?
Yeah, I would wanted to say that regarding the fact that when withdrawals will be enabled, there might be a sell pressure, which Tom just mentioned now. I think it's the people who will be staking will be higher than the people who'd want to withdraw, because I mentioned this in my newsletter also this week. Only about 11 to 12% of Ethereum's total supply is currently staked, and compare that to other leading networks like Solana or Cosmos, it's definitely more than 55 to 60%. So, and we also have a lot of progress being made with liquid staking. So it's not currently what the format is, that if you're staking directly, you're not getting anything back. But yeah, of course, if you're using Lido, you get ST ETH back. And even Coinbase has made a CB ETH version of it. So I think with more and more of these platforms coming in, we'll have the staking percentage increase, because people won't be losing anything they'll have their ETH balance. They'll be earning validator rewards from it, and they can still use it in DeFi. So, and even for like non like new users or who don't know much about DeFi, for them also staking would seem like a logical thing to do. So I guess we should treat it as a built-up buying pressure which will happen after the merge. So I'm not worried about that. And yeah, one thing I am careful about in the short term is some of us might be underestimating the like the effect of a successful merge. Let's say like on 13th or on 14th, they come out with the news. Like a lot of media sites, including ourselves, will have a headline that we have had a successful merge, and I think that can have like a short term but a good price volatility. And I'm also seeing a lot of short orders on the futures market. So that is also one reason to believe that people who are expecting sell the news kind of event might be liquidated first. And so yeah, coming back to Christian's point, there's going to be a lot of volatility. Like recently after the drop that we had in August that Jacob talked about, we saw a lot of whales picked up Ethereum, and they did not engage with Bitcoin. And even in the last week, like last week when we had the drop in Bitcoin to around 18,500, Ethereum was quite resilient. And that proves the fact that people are not ready to sell and they have been waiting for the merge. So eventually there is going to be sell pressure, but I won't say that it's like the merge has happened and now it's down by 20%, because anything can happen next week. But yeah, I would say that after a successful merge, a lot of institutions, a lot of players who have been waiting on the sidelines to see how this works will try to get in. And I think buying dips along the way could be like for the long term would be the best play.
See, thanks, Navesh. Yeah, I think that's all. That's a very good point. Like, being able to deploy your capital while it's simultaneously staked through the use of essentially semi-equivalent tokens is well, yeah. I mean, that's kind of a innovative thing that people I think will experiment around with for a while, especially people who are deep in the space by now. Mitchell, I see you unmuted, sir.
Pretty certain that if the merge goes down without a hitch, the prices will go up measurably. The problem here is understanding when it does happen, what is the impact on all the applications on top of the Ethereum layer. If a bunch of stuff starts breaking or the merge has problems with the implementation, and there's a non-trivial chance that does happen, the prices can probably drop. That's what I think, that these people that are saying, oh, the merge isn't priced in yet, or this is like the easiest trade ever, I think that's kind of an oversimplification, because it's pretty hard to quantify what the expected increase in price or drop in price is going to look like for a botched or successful merge. So how can you really understand what is the right side of the trade to take here, unless you really understand, like really following what the dev teams are talking about, and you have a good gauge of whether you think, in terms of like a technical background, whether you think that this is going to go down successfully or not. And even then, there's a lot of uncertainty there.
Sure. And like from my perspective, this is actually this is a great point. I don't have the technical chops to actually look into the code base and figure out if I think the merge is going to work, right? Like I have to essentially trust the judgment of people who know what they're doing, people in the Ethereum Foundation, the developers, folks like Arthur Hayes who have been around for a while. And, that's not to say that they're infallible, but because certainly not. But there's certainly a level of trust you're taking on, and like listening. I mean, even listening to us talk here, there's a certain level of trust involved. I also think the point about oversimplifications that you bring up, Mitchell, is interesting because for an industry that is as complex and rapidly evolving as this one is, I am daily amazed by the level of oversimplification and the narratives that I see around it. Christian alluded to this as well, like, this person he met at the festival, right? Like, has heard something or read something on Vox or, some more mainstream site about blockchain's energy consumption. And that's, turned her off to the whole idea, right? And as we know, that's a very gross simplification of how any of this works. Other thoughts from the group? Tim, Ant, I haven't heard from either of you yet. I think Tim unmuted slightly. Oh, well.
go ahead.
Tim, you go first. Or Ant, you go first.
Right, okay. So, yeah, actually, it's really interesting, Christian's experience at the weekend. It was 2 weekends ago. I went to see an old friend from uni who I hadn't seen for a good 10 years. And we were catching up. We were talking about stuff, and I said, "What are you doing now?" I said, "I work in cryptocurrency." And the first thing he said is, "As long as it's not NFTs." And I thought, well, that's kind of what I'm trying to specialize in, actually. So I said, "Okay, we can talk about that." Yeah, exactly.
What was his response, or what did you say? Like,
well, yeah, I just sort of said. I mean, like, I know, I kind of was. Yeah, I just said, that's okay. We can talk about that. And sort of his how do you describe it? His look fell a little bit. I think you could see the disappointment on his face. But he's certainly part of, sort of like likes to think outside the box kind of guy. Not one of the sheep, not one of the people that follows the crowd. And I've had a similar experience previously when teaching at school of just seeing how those that kind of, are very kind of right thinking, as it were, kind of like react to this sort of thing. So I really think that the merge will be great when the narrative and the reputation surrounding Ethereum in the wider public eventually shifts towards that understanding of it being, kind of effectively 99%, more energy efficient and sustainable and so on. I think that's going to be really, really good. And I think that's when you look at this idea that Ethereum is the liquidity hub for pretty much all of crypto, it has stood the test of time. I am absolutely sure it will continue to. I think it will grow as well. And with that in mind, I think as the merge comes up and you're saying, okay, how do I play this? Where's the gain in it for me? I think even if you haven't got the technical understanding that we've just been talking about, I think the simple way that I'm going to be playing it is that, say, do I believe in it long term? Yes, I do. And at that point, it becomes a decision about what am I going to regret more. If I miss this trade, how much am I going to regret it? If I go into the trade and lose some money or whatever, actually, if I believe in it long term, I'm not going to lose anything. It's a temporary reduction in the value of whatever it is I'm choosing to invest. So I kind of think it's probably, I don't see it if you've got a long term mindset, I don't see a situation where anyone can lose here. And yeah, I think it's more about regrets and trying to avoid regret. What are you going to regret least? And sort of taking it from that point of view.
I mean, this seems kind of paradoxical, but if you don't have an appetite for risk, or as much as other people do, like me, I'm just going to wait until after the merge. And even if the price goes up and it's successful, that's an acceptable outcome for me. But the other possibility is that things don't go as planned and it drops significantly, and then you're able to scoop up some cheap Ethereum. Because yes, that you make a good point, Ant, that long-term belief is very important in terms of how you inform your decision-making process.
Yeah, and I think as well, like in terms of technical problems at the point of the merge, I suppose you have to sort of start trying to imagine the scale of these problems and what are we talking about here? Are we talking about some kind of problem that develops that is literally, for whatever reason, is technically impossible to fix, and we destroy the network, or not we, because we're not doing it, are we? But the devs, they actually destroy the network. Is that what we're imagining here? That I guess that's kind of like not impossible, but it sounds, I don't know, it sounds too unlikely. A situation.
What I envision when I say something goes wrong is about usually migration of dApps from what the previous version of the chain to like whatever new versions might be available, or like liquidity pools being significantly disrupted by whatever this changeover looks like. Like those are the things that I'm thinking about, where it's not necessarily a big problem with the implementation of the merge itself. It's all these projects around it not understanding how it may impact their business or their apps, and the Ethereum Foundation not communicating clearly enough of how people can avoid these potentially catastrophic problems. So it could wipe out a lot of value on in the Ethereum ecosystem if it's not executed carefully, even if the merge goes off without a hitch.
That's actually an excellent point. When we were leading up to the Belichick's upgrade, I guess it was the Ethereum Foundation blog, published basically a set of instructions for how developers working on Ethereum would need to handle a merge. And it involves, like has been said, 2 upgrades. There's during the merge itself, there's going to have to be upgrades that are multiple upgrades that are run concurrently. And there's actually, it's beyond my understanding, frankly, but the Ethereum Foundation has been pretty clear with developers that this is a complicated process. You do need to be very careful and pay very close attention to basically do this exactly how we're telling you to do this if you don't want to screw it up. Tim, I'd like to get some last thoughts on the merge from you before we move on, because we haven't heard much from you yet.
I'll keep it short. I think the merge.
No need.
I mean, there's a small chance of something going wrong, but yeah, I mean, I'm not a developer. I don't really know. I just have a lot of confidence. But yeah, like after the merge, I think dips are definitely, I mean, personally, I'm going to be buying dips. If it does dip, if it turns out to be like a sell and use thing, because I just can't find anything wrong with so, there's going to be a massive issuance reduction. And at some point that has to make the price go up. And I just can't see anything, as long as the merge goes well, give it 2 to 4 months for the reduction in supply to actually kick in, which is kind of how long it takes after Bitcoin halvenings, if I've been looking at the charts correctly. And, the supply and demand metrics, the prices has to increase. So and I think that's kind of Arthur Hayes' argument as well. But, I just can't find anything that can really wrong with that, as long as people keep buying Ethereum at the same rates they are today, and that's kind of dependent on whether people are using the network at the same rate as they are today. And since both of those things, I think, will remain constant, the price kind of has to go up if you're reducing the supply. So, I mean, that's how I'm thinking about it. Let's hope I haven't overlooked anything.
So you're looking for ETH to pop up around Christmas then, huh?
Yeah, that's kind of what Arthur Hayes has said as well. He has, I believe, bought a bunch of 3,000 strike calls for December around that time. Although it's a bit rich for my appetite. I think he's going to be cutting it very close on those.
We'll see, but yeah, that's going to be tight, I feel. Any last thoughts on this subject before we move on to a slightly related one? Okay, then. Moving on to our next subject of discussion. This was yesterday's news of the day, well, in the crypto space anyway. You all will recall back in March, President Biden signed an executive order essentially authorizing ordering what was being called a whole of government approach to regulating cryptocurrency. He wanted input from basically every federal agency that there is. There's hardly one that was not involved in this process. Yesterday, I think it was the first report, certainly the first major report to come along as a result of this executive order. It came out from the White House Office of Science and Technology Policy, and it was titled something like the climatological and energy implications of crypto asset in the United States, I think. A title along those lines. And you guys probably saw this. I know everyone who works here did, but those in the audience probably saw it circulating around Twitter yesterday that Joe Biden and his administration wants to ban proof of work mining. This was all over Twitter. It, and it came down to something I'm sure most people here saw. There was one page in a 46-page document that, while addressing, I'll just read it to you. It's a pretty short little passage. It says, the Environmental Protection Agency and the Department of Energy and other federal agencies should provide technical assistance and initiate a collaborative process with states, communities, and the crypto asset industry, and others to develop effective, evidence-based environmental performance standards for the responsible design, development, and use of environmentally responsible crypto asset technologies. These should include standards for low energy intensities, low water usage, low noise generation, clean energy usage by operators, and standards that strengthen over time for additional carbon-free generation to match or exceed the additional electricity load of these facilities. Here's the kicker. Should these measures prove ineffective at reducing impacts, the administration should explore executive actions, and Congress might consider legislation to limit or eliminate the use of high energy intensity consensus mechanisms for crypto asset mining. Virtually everyone on social media erupted on this. The White House is going to ban proof of work. I saw a number of extraordinarily paranoid tweets yesterday saying that things like, it's not about climate change. It's about absolute and total control. Don't give them an inch and all this kind of thing. I took some time yesterday to actually read the report. And I think it's worth pointing out. We published a piece on it this morning that I think is worth looking at. That is not what this thing says at all. It is not a document proposing the banning of crypto or of proof of work mining. It says on one page of a 46-page document that if all of these other contingencies and plans and approaches to mitigating the environmental effects of crypto mining are unsuccessful, then, the administration might consider, or Congress might think about limiting or eliminating energy intensive mechanisms. But it was far from the case that the government put a report on the president's desk that said, yep, this is bad and we need to ban it. I think this is interesting because this is kind of a big deal. The president's executive order and the materials produced from it are probably going to form a bedrock foundation for how crypto regulation is written in the United States. And it seems to me that the cryptocurrency community, also notable that the government didn't use the word cryptocurrency, crypto asset, please. I was just amazed that, and I want to get your responses to this as well, because it struck me, and every other publication was guilty of this as well. Running in their headlines, the White House wants to ban proof of work, and it's just not there. It's not in the text. There's a throwaway line that considers it as a last resort, but the other 45 pages, not the case. So I guess I'd like to kind of open this up to the group. How serious a problem is this for you guys? This sort of willingness for people in the space to jump so quickly to their ideological conclusions about things. I saw, and I referenced this in the article as well, there were many people on Twitter who were using this news as an excuse to just make fun of climate change activists, right? Like, we almost had sound money, but the climate change people complained so loud that now we don't have it. And, it's kind of this sort of mocking and derisive attitude towards what's kind of a serious problem. So what do you guys think? Am I being too harsh on the space here? For me, it seems like, it's kind of how I mentioned earlier, this is a complicated space. There's a lot to take into consideration. And yet it seems so many people are just willing to jump straight to their ideological conclusion. Am I being unfair? Do you think I'm misreading this situation at all? What do you think, Tim?
Not at all. I think it's just a problem with society more generally, as I'm sure a lot of people are thinking. With politics is the main one. People are getting very opinionated about, because they have access to more information than ever through the internet, but they also have more access to disinformation or misinformation as well. So I don't think it's something to do with crypto specifically. I think that we can all see, like, when there are some, I'm not going to name any names, but there's some like toxic Bitcoin maximalists on Twitter who will just put out things that are absolutely nonsensical. For I like to think that they're just misinformed, but maybe they're doing it out of malice or whatever. But
sure, it's a mix.
Yeah, I'm sure it's a mix, and it is what it is. But I think actually, compared to some other parts of social media online, like other parts or like sort of subcultures within social media, like on Twitter, there's loads of different ones, right? And the crypto space actually seems marginally better when it comes to sort of like misinformation and misrepresentation of stuff. I think obviously it still exists, but I think we're doing pretty well compared to other parts from what I've seen. And the last thing I wanted to mention that kind of tangentially ties into this is to do with Luna Classic. We reported on this bit this week how it's pumped up massively, like a few 100%. There's been a real big narrative around it about how they're going to implement a burn tax that's going to massively reduce the amount of tokens circulation, and it's going to pump up in price. And through that, they're trying to get centralized exchanges on board with this idea to burn, because if you're trading Luna Classic on a centralized exchange, it's not done on chain. There's no way they can enforce a burn. So they have to basically go to CZ and be like, oh, please, can you manually implement a burn mechanism for us? Basically Binance put out a piece saying, it was sort of an update saying, you will, if they do the burn, if you're sending Luna Classic to or from Binance wallets, yes, you will get burned. But on the platform, when you're trading Luna Classic, there will be no burn. And on Twitter, as soon as that came out, there's so many of these sort of rabid Luna Classic bulls posting it, saying that, Binance is supporting the burn. This is amazing. And it was quite a spectacle, because it's literally the exact opposite. It's them saying that they're not going to. And people have just taken it the complete opposite way. I don't know if it's because of their reading comprehension or because they're just trying to it's wishful thinking. I don't know. But that was, I think the most recent example I've seen of what you're talking about, where people just have a lack of reading comprehension when it comes to things in crypto.
Yeah, I don't want to say it's a lack of reading comprehension. It's tough because, a lot of this stuff is complicated, and especially for someone still on learning curves, they might genuinely not comprehend what's being written. I think it has more to do with laziness, though. And you're absolutely right. It's not just in the crypto space. Like, we see this everywhere. It took me, that was a dense report, and it took me a while to get through it. And yet the stories were hitting Twitter, basically within, 15 minutes of the report dropping. There was no way that anyone who was writing on these things or writing on this thing had the opportunity or the time to actually dive in and see what it really said. They just found what they were looking for and popped it in the headline and ran with it, and everyone got very mad. I had another point I wanted to respond to, Tim, but it's lost on me. I remember. The Binance BUSD story that broke this week. Can we talk a little bit about that? I think Tim and Nivesh know a little bit about it, but basically there was well, what I saw circulating on Twitter and such was that Binance is going to phase out USDC, USDT, and so on. Is that true, you guys?
Nivesh, do you want to handle this?
Okay.
Yeah, I would just like to say that Binance is not trying to phase out any of the stable coins. It's just that it's trying to clear the clutter from its own trading page. So if you go to Binance right now, you will have 3 or 4 different trading pairs for one coin, one in USDC, one in USDT, and one in maybe PAX USD or something like that. So what they're trying to do is when you deposit USDC to the exchange, it will be converted to BUSD in the background, and you'll essentially have only one trading pair. So it'll improve the user experience. FTX does it. It has a group of 4 or 5 stable coins that it uses as their USD balance. But yeah, so it's not, you can still deposit and withdraw your choice of stablecoin. That wouldn't be affected. But one thing I'd like to add is that there is a difference in what they're doing. You see, FTX is using a USD, and Binance is just using BUSD. So I would say that being the largest exchange in the space and a prominent exchange, like for a number of retail users who are, and new users who like onboard the space. So I think it will increase the popularity of BUSD, and more people will be transacting in it. They'll be talking about it. They'll see it on a regular basis on the exchange. So definitely it'll favor Binance and its business. But if you're trying to use BUSDC, USDT, or BUSD, or any other stable coin that was already...
All right. Well, thank you for clarifying that for us. I know there's been a lot of confusion and outrage on social media in that regard as well. I want to move on to our next subject because we are sort of in the closing few minutes of the show. But this is important and an example of something that people cheered for. Tom, this was your story this week. We have seen what I suppose is the first major action by the Coin Center, I think, is working on this, but the first major action by like a private sector crypto company to challenge the Treasury's sanctions on Tornado Cash and the broader implications of it. So, Tom, what is Coinbase up to, and how's it being received?
Coinbase earned a few cheers yesterday from the crypto community on Twitter. Basically, Brian Armstrong announced that they were bankrolling a few people who are suing the Treasury because of the sanctions against Tornado Cash. Armstrong penned a blog post. It was pretty good, explaining their rationale behind it and everything like that. It's quite easy to understand too. Basically, it's nothing that we haven't talked about previously on the issue. It's stuff like, the Treasury exceeded its authority by sanctioning a piece of open software instead of a person or a company or a property or something like that. Open source software, they would the Treasury, according to Armstrong, the Treasury would need the approval of Congress to be able to do that. But I thought something that was really cool was that he also made sure to highlight all legitimate use cases for Tornado Cash. So in the thing, and basically Coinbase is funding the lawsuit from 6 people who who were using Tornado Cash for various reasons, for like completely legitimate, law-abiding reasons. And so these people had their funds like stuck, like blacklisted or frozen because of those sanctions. So that's why they're suing the Treasury, and Coinbase is like financing them. Among those people, there's Preston Van Loon, who's an Ethereum developer. There's someone who donated to Ukraine anonymously through Tornado Cash, just like Vitalik Buterin, like the Ethereum creator, did. There is someone who used Tornado Cash because they are like a high profile. They have a big online presence and want to make sure that they can, transact on the blockchain anonymously without being the target of hackers and cyber criminals. And someone else has like a big stake in business, and they want to make sure that their funds are separated from their real life identity. So I think it's good. Everyone, a lot of people cheered the initiative. It's good for Coinbase to be like doing something proactive towards this. A lot of other industry leaders like Circle CEO Jeremy Allaire or Kraken CEO Jesse Powell have talked about how something needs to be done about this. There was a congressman also, I think it was a couple weeks back, Congressman Tom Emmer sent a letter to the Treasury asking for clarifications and guidance for precisely like for law-abiding citizens, U.S. citizens, like what kind of recourse could they have if they found their like funds stuck in the protocol. So it's good. Like I think there's momentum building towards this, and there's maybe a tiny like a glimmer of like education or like the start of something around like education around why privacy protocols are important, and privacy is not just a right, but like you can want to have financial privacy for reasons that are not just like money laundering. Because I think that's still like a big perception nowadays is like, if you've got nothing to hide, then you shouldn't mind if you don't need your financial privacy. But I was particularly pleased with Armstrong's, like the time he spent like examining the different like use cases that Tornado Cash could bring for like the legitimate use cases Tornado Cash could bring.
Thanks, Tom. Yeah, I thought this was an interesting story for a couple of reasons. I've gone on the record having said before that I wasn't particularly surprised that a branch of the government, not a branch, but a department of the executive branch in particular, decided to use its authority to effectively block American citizens from interacting with a piece of software. That said, it's also not surprising that the Treasury is facing a little bit of trouble as a result of this decision. It was immediately observed the day that the sanctions went into effect that, people have money tied up in this. What are legitimate users going to do to get their funds back? Does the government have the right to seize those funds? Which nobody really seems to think that's the case. So yeah, there's going to, like the fact that there's going to be an ongoing legal battle challenging the Treasury's, the scope of the Treasury's authority to do something like this is likely just getting started. And I think, and it's obviously too early to say at this point, but I think we might be looking at something similar to the SEC Ripple case, in which, a high-profile case that is thought to have the components to set real precedent in the space. So, yeah, I think watch this one closely. Tom, did you have more to add? Or you just muted? Okay.
Why am I muted? But no, not at all.
Okay. Yeah, Christian.
Yeah, I was just gonna say it's a pretty good move from Coinbase.
Certainly has some popularity.
I saw. I mean, yeah, they've we've spoken about various mistakes they've made in the past, like the insider trading scandal and alleged insider trading and the failure of the NFT marketplace that they launched late and just didn't get any volume. But yeah, this is like a pretty good move. Yeah, I read the letter as well, and glad to see like Brian and the company like sticking up for this. I saw like Kobe say similar on Twitter, the trader and up only host, because he's kind of been in a kind of feud with Coinbase over some of the stuff he exposed to do with the insider trading, and he sort of described it as pretty Chad with his words, that they're funding this, and yeah, I kind of agree with that take. Pleased to see them sort of standing up for the industry.
Yeah, thanks, Christian. I think a lot of people are, because it does kind of reinforce this idea that, none of this is settled, right? Like, this is an evolving space. The idea that this year's rules are going to be next year's rules is not necessarily something to count on. And there's likely going to be a lot of, rules and regulation that result kind of as a synthesis of these forces kind of doing battle with one another in the courts. At least that's the way I think this might play out. Any other insights or hot takes on Coinbase's initiative here? Any criticisms or lurking suspicions?
I do remember that, of course, after the Tornado Cash sanction happened, that Coinbase were kind of when the big discussion about censorship came up, and would people censor, transactions and so on, Coinbase seemed to land right in the sort of center of the limelight there, and all of a sudden seemed to be under a lot of heat and so on. So I remember that they were in a pretty difficult situation, and I think the CEO sort of stood up and sort of said on Twitter that they would withdraw from being a staker rather than censor a transaction. So it was kind of interesting that they had that experience. But also that the kind of like going back to a slightly earlier point about toxicity in the crypto community, or perhaps a crypto Twitter community more arguably. But kind of when I saw them supporting this, I did wonder. The cynic in me thought, pretty good, pretty smart PR move if you had to make one. So that was my cynical take on it.
Sure, and that's undoubtedly part of the calculus that went into the decision-making process. I would bet on. So yeah, I mean, it's rare to find an action in the world that is 100% altruistic, right? But maybe if they're mostly aligning, Coinbase it is mostly aligning with what the community wants to see them do, then this could be this could be good, both good for Coinbase in the long run and good for the space. It also opens up Coinbase to possibly some I don't want to be cynical about how the inside of the government works, but there's cynicism everywhere, and I think it's possibly the case that Coinbase is going to continue to draw more attention from authorities, perhaps more scrutiny as they do battle with, the cabinet department. Any last thoughts on the lawsuit before we turn to our weekly market roundup? All right. Well, in that case, we'll talk about the markets a little bit, as we always do. Nathan is not with us today. He's currently on a plane to London, so he won't be joining us. So, you in the audience just has to deal with the opinions of us dum-dums who can hardly read a chart. What are some thoughts on the market, you guys? I've been I'll be honest, I haven't really been thinking about it too hard this past week, in part because I spent a lot of time thinking about it over the last 3 months and in the lead up to the merge. And now that we're kind of on the cusp of it, I'm sort of like holding my breath and waiting to see. Are there any calls that anybody is prepared to make with any level of confidence about the market, or have you just seen anything curious in the numbers? Navesh, you're probably the most astute observer of our markets. What's your take on this?
Yeah, so like we talked about the merge, so if it's like completely successful, there might be a huge jump there. But besides that, on 13th of September, we also have the CPI print. So that is going to be something to watch out for. The expectations are that it's going to be an even lower print than previous time, which was 8.5%. So I think that if that's the case, then there might be some optimism in the market that the Fed might go with a 50 basis point hike instead of a 75 basis point hike. And we could see like stocks and Bitcoin and the other crypto assets go up. But yeah, like based on the overall picture, like and the last two speeches that the Fed chairman Powell gave, is that they are expecting that there might be some pain in the economy, and by that I think regardless of what the CPI print is, they might go with a 75 basis point hike anyway. And interesting point about this is I was reading a report by Ben Lilly from Jarvis Labs. He's one of my favorite analysts, and he wrote about the housing market. And like, so the housing market comprises of the 40% of what 40% of the CPI index, and we haven't really seen a drop in house prices or rents after the spike that we saw in the last 2 years. So yeah, even if there is like hopes that the Fed might slow down, there is reason to believe that they might not, and they'll continue to have higher rate hikes. And we have seen it throughout the year that if they do that, then crypto prices and stock prices go down in tandem. So that's one thing to look out. I'm not really bullish towards the year end, because after the merge there is no really like a strong catalyst on the horizon. So let's see how next week plays out, and the week after that when we have the policy rate announcement from the Fed, because it's going to be like the two most important weeks for the next two quarters, I would say.
Thanks, Navesh. This raises a question in mind. I think it may be a good one to close on. When we talk about the markets and where they're going, the discussion of the Fed and Jerome Powell and the question of interest rates, or the federal funds rate, inevitably comes up.
Energy prices.
Don't forget energy prices. That's right. Yeah. And I wonder, and this is a question I want to pose as a group. We've talked much of this hour about the impact of narratives and storytelling on price action and market direction. But I guess what I want to ask is, does it really all come down to what the Fed does? Like, are there external market factors that are significantly driving these things in such a way that are meaningful outside of Federal Reserve policy decisions? Or is the whole market, as Navesh kind of alluded to, didn't like make this claim, but it's true that crypto stocks, risk assets, virtually always tumble when the Fed raises rates. Is there any escaping this? Is this just what we look to? Is this the criteria, or what's the role of other external factors in driving markets, I guess? Does anybody have any thoughts on this?
I mean, all the financial markets are interconnected. So
sure.
To look at crypto and believe that it exists in a vacuum or a bubble is naive, because all these other markets probably have a much bigger impact on crypto than people are willing to admit, even though this industry in itself desires to be a counterculture or rejection of these existing institutions. But you cannot escape these institutions. So it's a little bit of a catch-22. And what we can observe is seeing how does the cryptocurrency market, or Bitcoin and Ethereum, how do their prices move in relationship to these other external factors? And what does that mean about how the markets perceive cryptocurrency's role in finance? And a lot of what you see in terms of how people use cryptocurrency is that crypto right now is an extremely risk-on asset. So if people want to be very long the stock market, and not only is it very risk-on, it tends to respond very quickly to different stimulus outside of the financial market. So for example, when rates move, crypto tends to respond very quickly to that. So I was talking to a few different fund managers this week, and generally their perception of crypto is that it's a very interesting tool that if they want to go long the market, if conveniently and quickly, one way to do that, the stock market, is to buy Bitcoin, get exposure to Bitcoin, or even get levered Bitcoin, because of not only is it just about the volatility, but the amount of risk inherent in Bitcoin means that it's a very good proxy for like the hyper risky of the risky tech stocks without exposing oneself to too much isolated risk. So there are times when you buy an individual stock where you're basically, if you buy just an individual stock without too much diversification, you are taking uncompensated risk. And there's a bunch of concepts about this in finance where the only type of risk when you're trying to construct a portfolio, typically is systemic risk, which cannot be diversified away. And crypto is one way that funds can basically load up on a lot of systemic risk without taking on too much isolated, like industry risk of buying just like a single stock, for example.
So thank you for that insight, Mitchell. We're a few minutes over the hour, so I'll just start wrapping it up. Do we have any last closing thoughts on markets, on the Fed, on the lawsuit, on the merge, anything that we didn't cover that you guys are just burning to get out there?
I was just going to say quickly, one of the big narratives surrounding the merge was this idea that ETH would flip BTC, and that it would which would mean the ratio between the two would be 0.16 or something like this. And everyone I've seen, so many of these traders have been calling for it to top 0.1. And this week, ETH BTC, so basically the number of Ethereum you need to buy one Bitcoin, it hit a 22 high of 0.085. But now we've seen Bitcoin wake up, right? And it often turns out that the contrarian take often ends up being actually the right one. I know we're heading into the merge and it's a big thing for ETH, but with Bitcoin back over 20,000, I wouldn't be surprised to see that lead for a while, and that would probably put those speculations that the flipping or whatever could occur to bed. But yeah, let's see next week.
Let's see indeed. All right, I think that's a good note to wrap it up on. I want to thank everybody for listening and everybody who has participated in the conversation. I think it was a good one today. As always, it's been a pleasure. Take care, everyone. Enjoy your weekend, and we will see you all next week. Bye, everyone.